Greetings, fools. We're back at CES 2016 here in Las Vegas. I'm joined by my Motley Fool Supernova team. I'm David Kretzmann, Odyssey 2 mission lead, joined by Odyssey 1 mission lead Matt Argersinger, and my fellow Odyssey 2 analyst Brendan Matthews. While we've been at CES, it's been a pretty interesting start to 2016 when we're talking about stocks. Stocks are down, stock market's down about 5% so far in the first 4 days. It's actually the worst 4-day start in stock market history. So, interesting time to be looking at stocks. Obviously, we're ready to launch Odyssey 2 in the next week or so. And of course, it's never fun to see your stocks get pummeled. I think all of us are hurting. All of us at the Motley Fool, we're investing right alongside you. And it's never fun to see your stocks down 5% plus just to start, the first 4 days of the year. But we also want to keep the long-term context in mind. Volatility is inevitable with individual stocks. We're business folks, investors here at the Motley Fool and in Supernova. And if we have an investing thesis that's intact with the company, if we're still confident in the company and its leadership, we tend to look at these drops as buying opportunities. We're not going to sell a stock or buy a stock based solely on the movement, short-term movements of the stock. So Matt, I know Odyssey 1, when that launched about 4 years ago, you also faced some kind of similar short-term hurdles with the stock market. Maybe you could give a little bit of that context.
Yeah, sure. Thanks, Dave. Yeah, I mean, when we launched Odyssey 1 in March 2012, really, I mean, the market was very volatile at the time as well. It was down that summer pretty, really far, and a lot of our early recommendations in Odyssey 1 were really in the red. But then you flash forward 4 years, almost, and the picks we made that summer, I'm going back to Netflix, Amazon, Tesla, when we bought them at the time, it was volatile, and a lot of those were down 10, 15% really early on. But now, today, they're some of our biggest winners, and Odyssey 1 as a portfolio is crushing the market. So, like you said, I mean, it's tough to look at the screen and see nothing but red numbers in a lot of our stocks and a lot of the companies we're seeing here at CES. But at the same time, those create opportunities, and we get to look at the future and see that, wow, even though the stock market is doing its own thing, there's a lot of business and tech happening here that's really exciting, and that's going to really take care of the investments in the long term. So it's an exciting time to be an investor, even though we have this rough start to the year.
So yeah, it's been a tough open of the year. Really what's going on is Chinese markets were down 8% today, closing early for the second time, I think. Chinese market, the mainland market was 7% down, Hong Kong was like 8%. European markets are down 3 to 4%, US markets are down 2%. And what this is all about is it's about fears about the slowing Chinese economy, that it's not going to be as productive. It's totally a global workhorse. And they're doing this because the Chinese central bank is weakening the yuan. And I'm not going to predict anything about the Chinese market, but it's interesting for us being here, seeing how many Chinese companies are here doing business. If you open the program directory for the Consumer Electronics Show, you'll find over 100 companies whose names start with Shenzhen, which is the city near Hong Kong in the Guangdong province. It was one of the first special economic zones. And maybe the economy will fall off, but I still see tremendous things coming out of China. So I would not worry as much as maybe people who are sitting around looking at economic indicators that may be lagging. I tend to just look around what's going on in the real world and trust that a little bit more with my investments. And then also always stay long term so I have time to let my thesis play out.
Yeah, well said, Brendan. I'll just add one real quick thing that, every investment, every recommendation we make in Supernova, we're always starting with a minimum of a 3-year time horizon. And so whatever happens in a day or 3 days or 3 weeks or 3 months, it really doesn't matter. We're really at least 3 years, if not much longer. It's kind of how we invest at the Fool, and it's certainly so in Supernova.
Yeah, right along with that point, Matt. With Odyssey 2, we're launching late next week. We'll be buying roughly one stock every week till about March or mid-March. So we'll have a portfolio between 10 or 15 individual companies. Then over time, we'll probably build up the portfolio between 20 or 30 or even more companies. So at Supernova, with these real money portfolios like Odyssey 2 and Odyssey 1, we're building diversified portfolios. We're investing in a diversified group of individual companies that we're confident will deliver market-beating results over the long term. I think it's safe to say that we're more interested in where a stock will be 3 or 5 or 10 years from now than where it's going to be 3 days or 3 weeks or 3 months from now. So whenever we invest in a company, we do so with a long-term mindset. So keep that in mind as we're getting set to launch Odyssey 2. I think we're all actually kind of excited for the timing. We're able to explore these great businesses like Apple, Skyworks, Skechers, all these great companies, we're able to explore them now at discounted prices from where they were 2 or 3 weeks ago. So I think it entails great things for Odyssey 2 and the Supernova universe, having these discount opportunities. So we're all excited. Hang in there. The volatility, it happens with stocks, but remember, we're business-focused investors investing in individual companies. So that's the scoop, our market scoop for today from CES. Thanks for watching, and Fool on.